Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, Wall Street is partying, Main Street not so much. We got some data we need to look at and what you need to understand going forward. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So, the market's just cruising right along like everything's honky-dory. But, some interesting data came out today.
Party on, Garth. It's amazing. It's like we're living in two different universes. The first chart I want to show you is I know PC came in. Here's personal income in February. Okay, it rose 0.3%. Okay, the estimated 0.4%. So that's already a big miss.
Right.
But the personal spending rose 0.8%, and they thought it was going to be 0.5%, which tells me two things. One is that consumer is in big trouble, but number two is inflation's far higher than the PCE number that they put out there, because you're not spending 0.8% of your personal income, okay, if the inflation rate is at 0.8%.
Correct.
Okay. And it's funny because I think Shadow Stats is showing us at a 9% inflation rate. Just absolutely amazing. And you have a chart here, and I'll let you talk about that one, and I'll throw the third one up after that, is that here's another sense of what's happening to the average Joe and Jane out there.
Yeah, this next one is delinquencies for subprime auto lenders. This one specifically is Crescent Bank. They're a big subprime auto lender. The thing about that is it takes you back to the 07, 08 drop in the markets. And, obviously for those of you that were around, the trigger for that was the subprime lending on houses. Well, regulations change, so we don't have that loophole where people are just, stating whatever income and getting a house. Can't really do that anymore. But you can do that to an extent on autos. Autos is like the next canary in the coal mine, I think, because it was ripe for subprime lending, and here we are. And if you compare this to 08, you're going to see a similar trend here where they start cranking up while the market's approaching or at all-time highs or making higher highs. And again, this can go on till May, June, July in the markets. But I think the longer this goes on and the longer these delinquencies grow, the bigger the pullback will be ultimately when things finally roll over. So I think, there's a lot of similarities to past recessions. And the scary thing, Bob, is there's just a lot more leverage in the system than there was before. Higher leverage on top of much higher dollars in the system, right? Because the M2 levels are just miles above what they were in 08. So it's kind of scary because the unwind can be much greater actually than what we saw in 08 when you had Paulson and Bernanke in front of Congress begging for a bailout, and you hope you don't have to see a version 2 of that. But at this point, it wouldn't surprise me.
Well, I mean, at this point, Phil, the banking system can't keep up with it. So it's it's no surprise that they're trying to get that CDBC thing launched too, because they know they're going from fiscal dominance or financial dominance to financial repression. And the problem they have here is all the excess M2 has gone to so few people that, and look, I'm not begrudging the rich, but just looking at it strictly from a mathematical standpoint, is you and I make more money than we spend. Our money doesn't have the velocity of somebody who is making and spending. And what we have here now is that 95% of all this excess M2 is going into people that they don't even know what the hell to do with the money. They're just sticking it into treasuries, sticking it into the stock market. They're not sticking it so much into real estate anymore. They don't really know what to do with it. And that's a problem in the sense that it's not being used to create additional productivity to support the spending habits of our government. And at some point, I don't know when the hand grenade goes off, but it's been thrown into the room. And this next chart shows you what that looks like. Okay, this is absolutely insanity visually displayed. Okay, they're really front running the entire entire presidential move here to get it out of the way in the first half of the year. I mean, this is just absolute nuts. And you can celebrate it if you're in it, but people don't realize the repercussions that's going to come from this, Phil, when everybody and their brother that is not enjoying this, you know, 52% of the population have no stocks at all, right? If you read that chart, around 48% are, you know, heavily invested in a stock or invested in the stock market. Half the people are not, okay? And all they see is prices climbing, no money coming to them, right? Inflation increasing, and they're being totally ignored. And I think this is going to be the big problem. I know everybody's sitting there, and, you know, this is like my fourth, you know, well, actually, if I go back, I started investing right before the 87 crash. In fact, I joined a 401k in August of 1987. So I got to enjoy the crash very early on. I saw the 91 sell-off. I saw the 2000 crash. I saw the 2008 crash. I saw the 2011 flash crash, the 2018, the 2020. And every time these things are showing up, I hear the same stories from people all the time. Bob, this is not going to go down. The Fed got our back. Technology is allowing us to be more efficient. And usually within 2 or 3 months of every one of those things, we're in a 30 to 40% correction. Or in 11 and 18, we had, you know, 18% flash crashes or sell-offs. So I just think at some point, and that's the problem with this, is it's unknowable when this thing is going to go off. And I think tomorrow I'm going to show you guys, at least from my standpoint, what I'm looking at from oil and gold and S&P, my get out of Dodge basically with my long-term stuff when I'm going to be rolling into cash and sitting out the storm. And, you know, Phil, if you want to talk Bitcoin a little bit too on that, I think you've been more micro because we're really in a micro environment right now with Bitcoin. Maybe we could discuss that too. But, you know, you have to know when the party is going to end here, and you have to then have a rule and you have to stick to it, because people will get caught up in the buy to dip mentality all the way down till they're 40 and 50% poorer. And that's all I have to say about that, Phil.
Yeah, I agree. And I'll cover kind of what you want to look for in the index, the S&P 500, in terms of when that starts to roll over. Because like you said, you don't know when it's going to happen, but it's important to identify when it does happen. And as long as you can do that, you know, don't worry about catching the top, because, you know, you can let a few hundred points in S&P 500 go by because you just want to not short the thing early or get out of the market too early. You want to get out of the market when it's confirmed that it's rolling over. Because I'll tell you guys, where you supercharge your portfolio growth is when you can get out at the top of a bull market and get back in toward the bottom of a bear market. We're going to talk about getting out at the top of the bull market. So I'll look for that tomorrow. Otherwise, yeah, Bob, thanks for the charts. Guys, thank you for watching. Please hit like and subscribe. Check out our specials over at tradegenius.co. We'd love to see you guys in the room with us, and we'll help you navigate these crazy markets. We'll see you on the next video. Take care.
Trade Genius.